Hey everyone, welcome back to BullionIQ, your go-to channel for clear, insightful, and professional analysis on cryptocurrency, finance, and the big moves shaping the market. Today, we're diving into one of the most talked about theories in the XRP community. Could there be a secret plan between Ripple and the US government to make XRP a central part of America's financial infrastructure? And more importantly, could it be used to pay down the staggering $40 trillion national debt? Stick with me because we're going to break this down in a way that's easy to understand, no confusing jargon, just clear analysis you can follow. Now, this idea comes from a mix of speculation, community chatter, and some reports of high-level meetings between Ripple executives and former President Trump. The story goes that Ripple, which owns roughly 48% of all XRP in escrow, could transfer a large portion, some estimates say 35 to 40%, to the US Treasury. If that were to happen, Ripple would still retain 13 to 18 billion XRP, keeping it under the decentralized threshold, but still making Ripple the largest corporate holder. This could solve Ripple's biggest problem of decentralization while simultaneously giving the US a potential tool to manage financial liquidity. But let's pause here. First, the very notion of transferring XRP directly to the government and suddenly revaluing it is much more complicated than it sounds. XRP is decentralized. No single person, not even Ripple's CEO Brad Garlinghouse or co-founder David Schwartz, can just declare its price to be $10,000. The blockchain doesn't work like that. Any price adjustments would happen in the market based on demand, adoption, and liquidity. Sure, you can theoretically hold billions of XRP, but market forces ultimately determine value. Now, part of the intrigue comes from historical precedent. Think back to 1933 when FDR confiscated gold and revalued it. The idea is that the US Treasury could theoretically accumulate XRP and eventually use it as a strategic reserve. This would require the creation of a massive digital asset stockpile, regulatory changes, and the right infrastructure to manage and redistribute the asset efficiently. It's not just about holding XRP. It's about using it as a bridge for payments, tokenizing debt, and possibly even modernizing financial systems. The XRP community is buzzing because they see a potential path to massive value appreciation. If the US does start stockpiling XRP, the demand could rise, prices could surge, and XRP could become an essential part of the global financial system. But here's the key. This is a multi-phase, highly complex strategy that involves not just buying XRP, but also ensuring institutional adoption, legal compliance, and liquidity management. Without those elements, the whole idea remains purely speculative. As an investor or observer, one thing you need to focus on is security. Even if XRP has huge potential, your holdings are only safe if they're protected. Cold storage wallets like the ones from Decent give you that security with biometric access and offline storage. Keeping your crypto safe is always the first step before even thinking about massive future gains. So, what we're looking at today is a combination of rumors, high-level speculation, and real possibilities. Could Ripple and the US government actually be working on this? Maybe. What's clear is that XRP's infrastructure, its escrow, and ongoing tokenization projects make it one of the few digital assets capable of handling these kinds of global financial tasks, if such a plan ever came into play. Over the next few parts, we're going to explore how XRP could theoretically go from $2.80 to $1,000 or even $10,000, the mechanics of US debt management with digital assets, and what it would take to make any of this happen. Buckle up because the crypto world is complex, unpredictable, and absolutely fascinating. And here at BullionIQ, we cut through the noise, analyze the facts, and help you understand what could really happen behind the headlines. All right, so now that we've set the stage, let's dig deeper into the XRP escrow and how this theoretical plan could work if it were real. Ripple currently controls about 48% of all XRP in escrow. For those new to this, an escrow is basically a locked-up portion of tokens that can only be released according to a set schedule. Ripple releases 1 billion XRP per month, but often relocks 70% of what they release, which means most of the supply isn't actually circulating. This mechanism is designed to prevent sudden market shocks, but it also raises questions. If some of this XRP were promised to the US government or even to a financial giant like BlackRock, how would it be released and tracked? That's a massive operational challenge. Theoretically, if the US government were to acquire 35 to 40% of the escrowed XRP, they would end up with tens of billions of XRP. This could make the US one of the largest holders globally, while Ripple retains enough tokens to stay influential in the ecosystem. However, just holding XRP is not enough. The US would need to create a strategy to integrate these assets into national financial planning. That means regulatory clarity, secure custody solutions, and mechanisms for using XRP to pay debts both domestically and internationally. This is where the complexity skyrockets. Let's talk about regulatory hurdles. For the U.S. to use XRP in a meaningful way, laws would need to allow the Treasury and other institutions to hold, transfer, and transact in digital assets at scale. Right now, the legal framework for cryptocurrencies is fragmented, federal guidance is evolving, and different states have different rules. Even if a strategic stockpile of XRP existed, deploying it to settle debts would require comprehensive legislation, oversight, and partnerships with banks and financial institutions. Without this, XRP's potential as a tool for national financial management remains purely speculative. Another point to consider is adoption. XRP isn't just a token, it's a bridge asset used for liquidity between different currencies and financial instruments. To have any chance of affecting the $40 trillion US debt, XRP would need to be adopted at a global institutional level. Banks, governments, and major financial players would need to start using it for cross-border settlements, tokenized debt management, and collateralization. That's a huge leap from today's usage, but the building blocks exist. Ripple's on-demand liquidity, ODL solution, already moves billions in cross-border payments, and tokenization pilots like Ondo Finance are testing real-world applications on the XRP ledger. One of the biggest questions is, where does value come from? Simply holding XRP doesn't create wealth. The value depends on real-world demand for XRP as a settlement asset. If institutions hoard XRP to support operations and liquidity, the circulating supply shrinks and upward price pressure could occur. This is basic economics. Less supply plus growing demand equals higher prices. But again, this assumes mass adoption, regulatory alignment, and technical capacity to handle trillions of dollars in transactions. Speaking of technical capacity, XRP ledger infrastructure is already capable of high throughput and near-instant settlement, but scaling it to handle trillions of dollars in tokenized debt, global financial instruments, and daily transactions is another challenge entirely. The system would need upgrades to support ultra-high volume, maintain near-zero failure rates, and integrate deep liquidity pools. Without these upgrades, any large-scale government adoption would be extremely risky. Finally, let's not forget the history and precedent. Financial systems aren't static, and governments have used unconventional methods to stabilize economies before. Confiscation, revaluation, and strategic reserves have all been done in the past. XRP could theoretically serve as a modern digital tool for similar strategies, but the leap from speculation to execution is massive. Until official confirmation or actionable steps are announced, all of this remains theory. Now let's get into the numbers behind this theory, because that's where things get really interesting and complex. If the US were to use XRP to address its $40 trillion debt, the first question is, how much XRP would they actually need? Right now, there are about 100 billion XRP total, with roughly 59 billion in circulating supply. If the US were to accumulate even a few billion XRP, that would be a significant chunk of the total supply. But just accumulating it isn't enough. The price of XRP would need to rise dramatically to make any meaningful dent in the national debt. Let's do some rough math. Suppose the US holds 1 billion XRP. To cover $40 trillion in debt, each XRP would need to be worth around $40,000. That's obviously astronomical and highly unrealistic in the near term. But if the US could hold 5 billion XRP, the required price drops to around $8,000 per token. Still extremely high, but slightly more conceivable under extreme global adoption and financial infrastructure changes. To reach a price of $1,000 per XRP, the US would need to hold nearly 40 billion tokens, which is impossible given current circulating supply and Ripple's own holdings. This is why most analysts say that XRP becoming a tool to pay off the national debt is more theoretical than practical. But the speculation exists because XRP has unique capabilities. It's fast, highly liquid, and designed for settlement. Unlike Bitcoin, which is primarily a store of value, XRP is meant to move money efficiently. If governments and institutions start tokenizing debt, cross-border payments, or other financial instruments on the XRP ledger, demand for XRP could skyrocket, and demand equals value. Now let's talk about how this could work practically. First, the US would need to accumulate XRP through strategic purchases, partnerships with Ripple, or even confiscation of digital assets from illegal activities. Next, regulatory frameworks would need to allow XRP to be used as a tool for sovereign debt management. Banks would need to integrate XRP into their systems, liquidity pools would need to expand, and the XRP ledger infrastructure would need upgrades to handle the volume. Finally, institutions would need to adopt XRP for real-world use cases, which drives demand and increases price. Another important factor is supply management. As institutions accumulate XRP for operational liquidity, circulating supply decreases, which adds upward pressure on price. Combined with mass adoption, tokenization of assets, and cross-border settlement usage, this creates a scenario where XRP could theoretically reach extreme valuations. This is why some speculative circles talk about $10,000 per XRP. It's not just hype, it's based on extreme assumptions of adoption, supply squeeze, and integration into the global financial system. But we have to be realistic. Even with all these conditions, reaching such valuations requires massive global cooperation and technical execution that may take decades. The US cannot simply declare XRP to be worth $10,000 per coin like printing money. Blockchain operates on market dynamics. The only way value grows is through adoption, demand, and scarcity. Even if the Treasury holds billions of XRP, the price is ultimately determined by how much people are willing to transact and use it as a settlement token. Lastly, consider tokenizing debt instruments on-chain. XRP could act as a bridge asset to settle US Treasuries, corporate bonds, and other financial products. Pilot projects from Ripple and partners like Ondo Finance are already exploring this. If adopted widely, XRP's utility could explode, providing a real mechanism for value creation. But again, this is still in early phases, with only tens of billions of dollars in tokenized assets today. To reach trillions, we're talking about a huge global transformation in financial infrastructure. Now let's dive into the technical and infrastructure side of things, because XRP reaching extreme valuations isn't just about speculation. It's about whether the system can actually handle it. The XRP ledger is already fast, scalable, and designed for near-instant settlement. Transactions can settle in 3 to 5 seconds, and the ledger can handle thousands per second. But imagine a world where trillions of dollars in tokenized assets, cross-border payments, and government debt are flowing through it daily. The infrastructure would need significant upgrades. We're talking ultra-high throughput, almost zero failure rates, robust security measures, and advanced liquidity management. Without these, any large-scale adoption could fail catastrophically. Liquidity is a huge factor here. For XRP to be used as a settlement layer for global financial systems, there must be deep liquidity pools. That means there has to be enough XRP available for banks, governments, and institutions to move huge sums without causing massive price swings. Currently, XRP is liquid for retail and mid-sized institutional use, but scaling to handle trillions would require both technical innovation and massive institutional adoption. As demand rises and circulating supply is limited, price pressures increase. This is why some people theorize that XRP could reach astronomical values if adoption happens at a global scale. Supply management also plays a critical role. Right now, most XRP is in escrow, and Ripple releases tokens gradually. If institutions, the US Treasury, or other entities start accumulating XRP for operational liquidity or collateral, the circulating supply shrinks. Less supply combined with higher demand equals higher price. This is a key factor in the speculation around $1,000, $5,000, or even $10,000 per XRP scenarios. But achieving this requires careful coordination between technical infrastructure, market participants, and regulatory clarity. One wrong step, such as regulatory pushback or technical failure, could derail the entire plan. Speaking of regulation, XRP's adoption at a sovereign level depends heavily on legal alignment. Governments must be able to hold, transact, and tokenize assets without legal hurdles. This includes integrating XRP into national banking systems, custody solutions, and settlement mechanisms. Regulatory clarity would reduce risk for institutional participants and increase confidence in XRP as a reliable tool for large-scale financial operations. Without this, XRP's price and adoption potential remain limited. Let's also consider real-world adoption. Pilot programs are already underway. Companies like Ripple, Ondo Finance, and OpenEden are tokenizing US Treasuries on the XRP ledger. This shows the potential for XRP to act as a bridge asset between traditional finance and blockchain. Imagine a future where US Treasuries, corporate bonds, and global debt instruments are all tokenized on XRP. The ledger wouldn't just move money, it would be the backbone for a new global financial system. The challenge is moving from pilots with tens of billions in assets to trillions in real-world application. Another critical factor is technical resilience. High transaction volumes, institutional adoption, and global usage put immense stress on any blockchain. XRP would need enhancements to handle edge cases, avoid network congestion, and maintain security. Biometric verification, fail-safes, and cross-chain interoperability would all be essential for sustaining a system capable of managing national debt, global settlements, and trillions in tokenized assets. Finally, consider market psychology. Even if the technical infrastructure is perfect, adoption is voluntary. Institutions and governments will act based on confidence, regulatory support, and perceived stability. XRP's role in global finance would require a combination of trust, technology, and consistent performance. If any of these elements fail, the price targets and usage scenarios could collapse. Now let's get into the heart of the theory, how XRP could actually be used in a U.S. debt strategy. The idea here is that the U.S. could leverage XRP's blockchain capabilities to modernize financial systems and manage national debt. This isn't just about holding a bunch of tokens. It's about creating mechanisms to tokenize debt, facilitate settlement, and use XRP as a bridge asset in global financial markets. Imagine U.S. treasuries, corporate bonds, and other debt instruments existing not just on paper, but as digital tokens on the XRP ledger. This would allow faster, more efficient settlements and potentially reduce costs across the board. If the U.S. Treasury were to accumulate billions of XRP, the next step would be to integrate it into payment systems. One method could involve using XRP to directly remit value to creditors. For example, the U.S. owes trillions to other countries or institutions. Instead of sending traditional dollars, it could theoretically settle obligations in XRP, which could then be converted by the recipient into local currency via high liquidity pools. This system would only work if the market accepted XRP at a reliable valuation and if legal frameworks allowed such transactions. Without adoption and regulation, XRP remains a theoretical tool, not a practical solution. Another aspect of this strategy is tokenizing existing debt instruments. Companies like Ondo Finance and OpenEden are already exploring tokenized U.S. treasuries on the XRP ledger. If scaled, every bond or security could have an on-chain representation. This would create a transparent and programmable system for managing trillions in debt. However, tokenization alone doesn't create value. XRP would only derive value as a bridge asset when used to settle these digital instruments, so demand from institutions is critical. The more XRP required to facilitate these transactions, the higher the potential price pressure. Supply dynamics also matter. If the U.S. holds a significant portion of XRP for operational purposes, the circulating supply decreases. At the same time, global institutions hoarding XRP for settlement and collateral purposes further reduces liquidity in the market. This combination, high demand and lower circulating supply, is what fuels speculation about extreme price targets, but it also introduces risk. If adoption slows or technical issues arise, the market could face instability, which would affect the feasibility of using XRP in large-scale debt management. Technical resilience is another key factor. The XRP ledger would need to handle massive transaction volumes across multiple asset classes, including treasuries, corporate bonds, derivatives, and potentially other tokenized real-world assets. Upgrades would be necessary to support ultra-high throughput, cross-chain interoperability, and security features to protect against cyber threats or operational failures. Institutions will only adopt XRP if they trust the system to operate flawlessly at scale. Regulatory clarity is equally important. Laws would need to allow the U.S. Treasury, banks, and other institutions to hold, transact, and tokenize assets using XRP. This includes integrating crypto custody at banks, ensuring compliance with international financial regulations, and potentially redefining XRP as a complementary currency or liquidity asset. Without clear rules, institutional adoption is unlikely, and XRP's utility in a debt strategy remains theoretical. Finally, the real challenge is adoption. XRP's potential is enormous if used as a settlement layer for global finance, but adoption depends on confidence, regulation, and technical reliability. Even if the U.S. stockpiles billions of XRP and tokenizes debt instruments, the system only works if financial institutions and other governments participate. Without adoption, XRP cannot create real value or solve the debt problem. Now let's wrap this up by discussing the speculative price targets for XRP, what it would take for adoption on a global scale, and the realistic hurdles that might prevent this from ever happening. First, the numbers. We've already talked about how the U.S. would need billions of XRP to make any dent in the $40 trillion debt. The price per XRP in these scenarios becomes astronomical, $1,000, $5,000, or even $10,000. Achieving this requires not just holding XRP, but massive global adoption by banks, governments, and institutions as a primary settlement asset. It also assumes that circulating supply is limited because of hoarding and escrow mechanisms. Without these conditions, the price targets remain speculative fantasies. The market capitalization required for XRP to reach $10,000 per token is mind-blowing. We're talking trillions in value, comparable to the combined market cap of all global assets. This is why most financial experts view extreme XRP price predictions with skepticism. For context, if the US were to hold 5 billion XRP, reaching $8,000 per token could theoretically cover $40 trillion. But this scenario requires XRP to be at the center of global financial infrastructure. a massive leap from today. The point here is that while XRP has potential, the reality is that even partial adoption could take decades. Now let's talk adoption factors. XRP's utility comes from its ability to settle transactions quickly, serve as liquidity between currencies, and support tokenized assets. Ripple's on-demand liquidity is already moving billions in cross-border payments, which proves the ledger can scale for some use cases. Pilot programs for tokenized U.S. treasuries are underway, but moving from tens of billions in assets to trillions is a different story. Institutional trust, regulatory clarity, and technical upgrades are all required before XRP could realistically serve as a global financial backbone. Without these, adoption, and therefore price, remains limited. One of the biggest hurdles is regulation. Governments need to define how digital assets can be used for debt settlement, asset tokenization, and cross-border operations. Integrating XRP into national financial systems requires both legal certainty and infrastructure support. Any misstep could prevent widespread adoption and drastically limit XRP's role in the global economy. Even if the U.S. acquires a huge stockpile, XRP cannot be forced into use. It depends entirely on market confidence and institutional participation. Technical infrastructure is equally critical. The XRP ledger is fast, but handling trillions in tokenized assets requires upgrades to throughput, security, and interoperability. Institutions will only adopt XRP if they trust it to perform flawlessly at scale. Any failure could undermine adoption, decrease liquidity, and create price instability. Security, cross-chain compatibility, and robust transaction settlement mechanisms are non-negotiable for XRP to function as a backbone for global finance. Finally, let's consider investor perspective. XRP is unique because its value is tied not only to speculation, but also to real-world usage as a settlement and liquidity tool. For long-term investors, it's important to distinguish hype from fundamentals. XRP's potential is enormous if governments and institutions adopt it for tokenized debt and cross-border payments, but extreme price predictions like $10,000 per token are highly theoretical. The real value comes from adoption, scarcity, and utility, not speculation alone. To summarize, XRP's potential as part of U.S. financial strategy is fascinating to explore, but it comes with massive challenges. Adoption, regulation, infrastructure, and liquidity all need to align perfectly. While some speculate about extreme price targets, the most realistic outcome in the near term is gradual adoption and incremental value growth. Investors should keep an eye on institutional partnerships, tokenization projects, and regulatory developments to understand XRP's evolving role in global finance. So, while the idea of XRP helping the U.S. pay off trillions of dollars is exciting, it remains theoretical. The real takeaway is that XRP is more than a cryptocurrency. It's a financial infrastructure tool with enormous potential if the world decides to adopt it. And that's exactly why experts, investors, and the crypto community are watching every move Ripple makes, and why you should too.